It's me Pavitran here. Today we're gonna discuss weekly levels. What are the levels we should be watching out in crude oil for the upcoming week? Okay, let's a small recap of what are the levels which I mentioned in the previous week and how these levels was impacting and how these levels help you. I was clearly mentioning from 25th of May that last week, that means 2 weeks before, the high made was somewhere around 34.51. So I was just keep on mentioning the same levels for a long, is that a close on 4 hour candles or a daily candles above 34.60 is the only way for a bulls to ride a strong momentum. Other than that, if that did not happen, then fall is on the cards. I was expecting a fall because of low volume. The rise has been not supported with a high volume. The price was rising, but volume is not being supported. So we're expecting initial crash that started to happen on last Friday. So I was just expecting the same on opening. After opening, you can see there was a Monday morning opening. The price fell, but follow through did not come. Instead, it broke the previous high and it started to go up. So that was a clear indication that buyers are in the market and they are not allowing price to fall further. So that is the key. Then when price reached the 34.5 level, seller got activated sharply and they were trying to push it down, and then buyer tried to take control and even they broke it successfully, but they can't able to manage it. As I said, a close on 4 hour candles or a daily candle is needed for a strong bull ride. So nothing like that happened. Then it fell. Then they tried to go up. Then as you can see, they start to form an lower high and lower high and lower high. This clearly indicates is that market is bearish. So that is what I keep on mentioning from 26 to after the recent lower highs. I was mentioning that short term bearish is on the card. Short term bearish, short term bearish. So this is the main reason for that. And as you can see the levels, how these levels are being respected, that's not rocket science behind it. As you can see, zoom it. These are the levels which has been respected in the past. From 19th May, this level is respected as resistance, and once it broke off, it tried to act as resistance, and if again it got broken up and above, then now it's acting as support. And when price tries to come here, now it will act as a support. See, it took support and then rallied up, and the next day it broke. Then you can see that will be acting as a resistance. Whenever price tries to come near to the level, it acted as resistance. Once that resistance got broken, then you can see it as acting as a support. Whenever price comes near this, it is acting as a support. So similarly the same, um, on this day, I think after the fall from somewhere around yeah, this is the day where the fall has started pretty vigorously. And 27th, after the fall of 27th, I was clearly mentioning on Monday that a strong close below 30.80 level is needed. If that is succeeded, then we can see a huge fall in crude oil. But as you can see, from 18th of May, price took support in this region, here, even here. So when price tried to come near here, then you can see what had happened. Then the rally started from here, it went all the way till here, then a small retracement, then again the rally started. I was expecting price to be stuck in the range bound. I did not expect this rally. Main reason for this rally is that rig count data which has been released on Friday is positive for crude oil. That was one of the actual reason. Maybe I can able to say that it can be a main reason too, because the recount data which was somewhere around 900 to 800 came down drastically to 450, and now 17 or 18 is on the cards, I think. I don't exactly sure. We'll check and revert back to you as soon as possible in the coming videos. So that is the main reason that I triggered this. And as you know, the major news is that US China war is on go trade war is going on. Mr. Trump is causing everything, and he just recently issued a statement that is terminating the relationship with WHO. All will have effects on Monday opening. That is the main reason that based on the Monday opening, we can easily able to predict for few for the coming days till Wednesday or till Tuesday. For the past 2 days, we can able to predict the market on based on Monday's opening, whether this will be a falling market continuously or the bull ride will continue. So okay, for a strong bull ride to continue, what else? What is the boost that we needed? A strong bull ride to continue, Monday opening has to be a positive note. On a positive note, if it tries to break above 36 and closes, then 38 and 40 is on the cards for sure. But if a Monday morning, as you can see a big red candle, then as usual a 30.80 level is must for bear to take control. In between level, the same level will be acting as support and resistance, temporary support resistance. The lines which are marked in black will act as an strong support and resistance. Whenever price is above that, it will act as an support. Whenever price below that, it will act as a strong resistance. So what you should be taken into consideration is that Monday opening, a strong Monday opening will decide the trend, whether bulls will be in control or bears will be in control. What are the lower getting? Okay, say for example, on Monday there is a strong green opening. It had opened above 36 and it had tried to succeed. It has maintained for quite a long time. Say for example, till 9 o'clock, it had sustained somewhere above 36 to 37 region. It had tried to sustain. Then you can take an entry with recent the opening candle of that Monday low. You can take that as an support, and you can just try to travel the trend around 38. 38 is a strong one. If it manages to break and close, then 40 is on the cards. Now what is the first hurdle on a weekly level is that 36. For a long entry to get activated, a strong close is needed on 36. On a Monday opening, if the 36 breaks and sustains on a morning candle, then you can go for a long. Or else, if it is a deep red one, then we have to wait for a close of above 36. As I said last week, a strong close above 34.60 is needed on either a 4-hour candle or a daily candle like this. For a confirmation, you can just go with the 4-hour candle close above $36 rally. Will take will move the market till 38. After it get closed above 38, then 40 is on the cards. And what is the stop loss for that is that you can, once it gets triggered somewhere around 36 close of 4-hour candle, for a tight one you can keep 34.60, and below that I don't think market will take this support. No, I don't think so. This is the least stop loss you should be considering. Once it breaks, then bull ride will be over. If you had taken a long somewhere around say for example, if 36 is sustained and you have taken a long entry, then what is the stop loss you should keep? 34.50 to 34.60, you should be keeping it as a stop loss. Then once it moves in your favor, just trial it according to the candle low. Once market tried to reverse from 37 or 37.5, it reversed suddenly, and if it had sustained below the 34.5 region, then you can't expect or you can't hold on much longer, because this is the final stop loss for the long which has been activated at 36. You have to respect the stop loss. You can't do hope trading. In fact, if you want to go with the longs, you're very sure of the direction, means you can try to hedge your position. Say for example, in case if you're being hedged, then you can hold your edge till 30.80. After that you can just close your future long. Then you can just continue to ride with your hedge, so that whatever loss that has happened in the future will be covered in the hedge by going in a bearish view. So that is one option you can take. Oh, okay. On a strong bearish note will be coming strongly around for me 30.80. I need a strong close below that, because is that the recent lows which has been made here, a bulk of buying order which has been pending in the market. Whenever you can see, say for example, on Monday, a big red candle, it tries to take a small retracement. On Tuesday or Wednesday it tries to come near this level somewhere around 31. You can see a sharp retracement or sharp rejections towards the upper side, because as you can see, a lot of buying order is in place from this region. Buying order, buying order, buying order, buying order, even in these regions. So you should be focusing more on 30.80 level, from 31 to 30.80 levels, and 36 level. So that will be the range you should be concentrating much more on. In between that, about intraday, I will just post videos regularly, since I have been posting many videos around 11 or 12. So if you want to trade based on that view, you can able to trade somewhere around 11 o'clock to 12 o'clock based on the views on levels which I've been giving. On a weekly basis, these are the important levels to watch out for. Once, if this breaks 30.80 breaks, then next support will be around $30 level. That's a psychological one which has to be broken. If it's broken, then 25 28.5, 28.5 and 25 is on the cards. So these are the major hurdles which will be in crude oil. um, Still, on a weekly basis, crude oil is bullish for me. To get a still more bullish or a strong bullish for me, for that's my confirmation, is that 36 has to sustain on a 4 hour candles or daily candles. If you want, you can just try maybe around the last week low. By keeping last week low, one can go and enter into the long position, but I would not advise that, because it's already near the top according to me, because there has been no support on the local demands or the global demand of the crude oil. It's only rising because of the production cuts. That is the only hope. If production cut is accompanied by demand, then you can able to um, enter here. You can keep stop loss, and once it breaks, then you can go into another lot. So you can try to keep on pyramiding that, and whenever the resistance comes, you can just book, and you can just add another lot on retracement. So these are the things you should be doing when market is in normal conditions. This is an abnormal one, because there has been no demand of crude oil. These price fluctuation, it's only because of the big operators or big investors who is just trying to keep the crude oil stable. For example, OPEC is trying to stabilize the market. Even Saudi Arabia has agreed to cut the production. Middle East agreed to cut the production. And the major thing is that all the rigs which has been operated on US has been shut down. So for them to restart the operation, there is a tedious process behind that. The drills has to be placed. I don't know the exact name for that. So that's a tedious process for restart of the whole machinery without a human effort. I don't think that is not possible. And the demand for crude oil is much worse. There has been no lockdown effect has been released in India, so we can't expect any major movements of crude oil. Only the key investor will try to move, and they will try to trap the retailers. So for example, I'll give you one example how they will trap. They just made the market to push down, thinking that the market is going to fall down heavily. All went short. Many of the traders which I know are short in the market, then the price rallied up from $31 to 34. They have squared off, and thinking that it will go long, many of the traders have taken long position here, and price came down heavily. And I even advise this, okay, don't go short. A strong close is needed 30.40, and many are still caught in the middle. They don't even know which side the price will go. When the price goes against their position, they're asking which is the support and what are the levels you should be watching out for. um, if they have hedged the position, they will be sleeping happily. So that is what I'm trying to say. uh, Hedging is an insurance. If you get into an possible conditions, it will save you. At least if you have say for example, if you are having a loss of around $1,000, if you have hedged that position, maybe your loss would have been cut by half, $500. So $500 is in your pocket. Only $500 is gone out of from your capital. And if you cut shorted your long position or short position and try to go with an hedge, even that $500 would have been given somewhere around 600, or even it will just to make you come out of the trade as cost to cost. That is what I am doing. I will usually hedge my position when I am sleeping overnight, because you can't be naked in share market, because only one news from any of the big fellas, it's enough to collapse the market. You can't able to wake up suddenly, you can't able to place the order. No, no, this is not going to happen. You will end up facing loss. So it's always better to hedge a position, sleep peacefully. Then if you're having a worst nightmare, or say for example a crash of $10 rally, so you are having an hedge position, then what is the worry on that? When many of the traders are facing issues, difficulties trying to cut off their position, you will be happily waiting, trying to cut off the position, either hedge or in future, whichever position which is going against you, then try to go with remaining one. Either it can be a hedge or it can be a future one. Just write it. That's what I'm keep on saying. Trail your profits, book small profit when it's range. When you know that it's gonna be a trending, then try to ride with the previous day low as your stop loss. It will increase your capital. It will double or even triple your capital. So this is what the advice I'm giving you. I exactly don't know how options play out in crude oil in US and in UK. In India, it's very illiquid, so can't able to trade on options. Maybe if players are trying to come into the option, and if in Indian markets making options liquid, then I can able to explain you how I do my hedges. That's it from me. The look for the levels 36 and 30.80. Keep this in mind for the coming week. Monday opening, you should be very sure of it. A Monday opening will decide the trend for coming week. Trade cautiously. Market is going to be extremely volatile. Just go with the levels. Just fix your stop loss before you entering a trade. That is the only thing which will keep you in the game. If you keep on praying and hoping that please turn in my favor, please turn in my favor, and you keep on averaging at your losses, then your capital will be wiped off, and you have to start from the bottom. and to start from the bottom is not an easy job. It requires a huge mental hurdle to come out of it. So please, 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 please try to do or stick with the levels, or try to hold your positions with the hedge. Thank you.